We did an acquisition of Aviate Asia, which is an excellent franchisee for equities from Hong Kong, Singapore, out in Melbourne. So they bring us about close to over 150 institutional relationships on the table. We got BGM out of South Africa. So we already sort of head started by putting some relationships on the table. The research division that is there under iBanking is covering close to 150 companies. The research, as I said, is not only India focused, gradually is getting broad-based to emerging country focused. 70% of the research analysts are rated, which gives it a very different flavor than standard research analysts. And as the team gets completed, we are still putting the nut and bolts together. The plumbing still is being put together. I think more or less completed, but still some portions need to be, put together on that. I think we will emerge as a true emerging market iBanking player. Now, how do we differentiate ourselves? I don't know anybody from India who is focused on something like this.
In terms of the countries that you need to really set up a presence in emerging markets, you've obviously covered some of the countries. What are the new countries you're planning to venture into and set up?
At this point, we got licenses in Singapore, Hong Kong, London, Dubai, South Africa, but there is a full emerging market plan that we have in place. We got Indonesia on it, Malaysia on it, we got Taiwan, we got Japan on that, because there's a lot of capital in Japan. We're looking to expand some places in Brazil. So there is a plan that is placed encompassing, I think at this point, close to 14 to 15 countries. And the first phase is 7 to 8 countries. Then we go to the next phase to add 5 more countries. Now, one is this plan is driven by our hunger to, once we establish and deliver in these 7 countries, the teams are there, then it's easier to go to the next block of 5, 6 countries. Other one is on opportunities. So we get an opportunity to do an acquisition or a partnership to any of our countries that we have planned, we'll jump onto that. But I think clearly in the next, I would say on a very broad platform, 5 years, but definitely we're targeting the next 3 years to complete our, at least our initial target of 14 to 18 countries in that.
Also, when you look at the investment banking business and, creating this emerging markets play, do you believe there's going to be cross-border deal flow opportunities on the M&A side? You believe there are investment opportunities, gathering capital, investing? What's really the...
Oh, definitely. I mean, the whole place dependent on cross-border M&A activities. We already see that happening today. Today, the developed economies, if you look, there was some data I was studying a week back, and there is the kind of investments that are held by developed economies in the emerging country today is going to grow by 10 times in the next 8 to 10 years, over the next decade. So definitely more and more assets of emerging countries are going to get owned by the developed economies. So that means capital inflow, advisory fees, issuance of various bonds. So there could be the data shows that close to over $400 billion worth of fees, revenues are going to be generated through fees in various forms and fashion. So there is a clear opportunity there. We need to place ourselves in the right mode at the right time with the right structure to capitalize on that.
Well, when do you expect really the numbers to start kicking into the,
Well, numbers are already kicking in. I mean, they're kicking in ahead of schedule. You see, you have to look at perspective two things. We are building an institutional business. So we're building a foundation that is very tempting, and actually more tempting and rather not challenging too much, that we can actually start bringing in revenue, start showing profits. But our focus is to build a strong foundation. We're trying to build a multi-story institutional building which is unique. And our core focus today is to invest more into the people, into the systems, into the teams, to make sure the foundation is rock solid and cannot be shaken up by any downturns. There will be challenges, but at least it's strong enough and resilient to hold any headwind. So our focus is on that. The income, the revenue is already started. With an acquisition revenue, we are actually, I think, close to 8 to 10 months ahead of schedule as per our internal planning. Now it will be a matter of time when we build up the critical mass of a team and we build up the deal that profitability will start showing in. But clearly the intent is there. And that is demonstrated by the people that have joined the company, that is demonstrated by the acquisition, the affiliations we have done, and the way we have taken the licenses, and the way the business revenues are already started. So from anybody's perspective, we are committed to it. The revenues have started. To some extent, in some particular smaller ways, there's profitability. But definitely it's going to be some time before we really, rank it up and build it up to make it a meaningful number.
Let me shift focus to the domestic business now, where you're a very diversified financial services group. There's been a shift in the business mix, a strategic shift in the sense, a conscious shift towards the lending side of the business. Any particular reason why you're choosing to focus on that segment now?
I always say Religare is a 360-degree diversified financial services player, and we are driven by innovation. So that basically means that we need to be clear that whenever there's an opportunity, we need not to be bureaucratic. We don't want to just, okay, this is what I do, this is what I will do. We need to, okay, there's opportunity on this side. Let's just let everything carry on and let's capitalize where the opportunity is. Lending business on the SME business is clearly an opportunity we see today. But you have to appreciate the fact that Religare Enterprises is a holdco. What it does is provide strategy, capital, enterprise risk level, drives aspirations, and the right word is a strategic architect to what the subsidiaries do. So at the holdco level, we are not just a shell company. There's a lot of people sitting there working, focusing on build the businesses that are underneath it. So there's a shared activity like HR, like IT and secretarial all shared over there. So when we sit at that level, we clearly see India as one picture. And we started off as a brokerage house, where brokerage used to be close to 70% of our income. But we realized that brokerage business is going to be, while it's going to grow as a number, the margins will always come under pressure. So we had to diversify into other businesses, which we did into wealth management, into lending business, capital and non-capital market. So lending today is contributing close to 40 to 45% of our top line. And we feel that this is one business which is continuing to grow in the last couple of years and still will continue to grow the next 8 to 10 years. There's a huge demand for companies from the SME segment for capital to grow, and there's a middle class population which is coming there, which has an aspiration to take loans and deploy them for their level of growth. We clearly feel ourselves placed well to do that. The book today is close to about 7,000 crores in that, on both the capital and the non-capital market lending, and we are growing it on an aggressive platform. We feel, as long as it's deployed well, we are not doing any personal loans in that. So it's pretty much deployed against secured assets, and we want to build up ramp that business up on a very aggressive platform.
Do you believe you may have started a little late?
I don't think so. No, not at all. I think we started at the right time. You see, no business is late. You need to be sure you're ready for it. So clearly there is no such thing as a peak, no such thing as a bottom. It's when you enter, you understand the business. We enter the business when we were ready with the right team, with the right system and the right technology to manage the risk. So that's when we entered it, and we have built up on it. Now there will be phases of business when the business is tough and it is not tough. And that is part of the team and the system to manage that, So I clearly don't believe that, we started late or we started early. We got in from our perspective the right time, and we are building it up in that fashion.